Hey everyone, I'm Ray Burkhalter, co-founder of REI Funding Partners and managing partner of Renovate the State Private Lending Fund. For nearly 2 decades, I've been involved in private lending, and I'm really excited to share some insider information with you here in this video series. We'll walk through exactly how private lending works and why many sophisticated investors use this strategy to generate recurring income from real estate loans. Each video in the series is short and informative. We hope you enjoy learning more about private lending here. Thanks.
All right, welcome back. So as we've been digging into private lending, one of the biggest questions that always comes up is, how does it really stack up against the investments we already know and hear about every single day? Well, today, that's exactly what we're going to do. We're putting private lending head-to-head with stocks, crypto, and even owning real estate directly. Okay, let's get into it.
For most of us, the world of investing really follows a few well-known paths. We know the names, we've all heard the stories, the huge wins, the really tough losses. These are kind of the cornerstones for a lot of people's portfolios.
So the big question for today is this. How do these familiar options, the ones that are always in the headlines, how do they actually compare to a totally different strategy? Is there another path out there that might offer a completely different set of advantages? Yeah, when you think investing, these are probably what pop into your head, right? Stocks, mutual funds, buying a property, and of course, the new kid on the block, crypto. But today, we're adding a fifth player to this lineup, private lending. Let's really see how it fits into this whole picture. Okay, let's kick things off with the fast movers, stocks and crypto. There's a good reason these two often get talked about in the same breath. They really represent that high-risk, high-reward side of investing, where everything is driven by market buzz and that potential for explosive growth. So the fundamental thing to get here is what you're actually buying. With stocks, you're buying a small piece of a real company. You're tied to its performance, its assets, its profits. But with crypto, you're investing in a digital asset. Its value is often driven more by the underlying technology, how many people are adopting it, and let's be honest, a good deal of speculation, not necessarily tangible assets. But for all their differences, they share one incredibly powerful promise: the potential for serious growth. I mean, this is the main attraction, isn't it? Investors jump into stocks for long-term wealth building and into crypto for those, well, sometimes crazy, rapid gains. It's all about chasing that upward curve. But here's the other side of that coin. That promise of growth comes with a shared, and sometimes harsh, reality: volatility. Both of these markets can swing like a pendulum based on headlines, economic news, or even just a single tweet. It means that amazing potential for reward is always, and I mean always, tied to some pretty significant risk. All right, let's completely shift gears now. We're moving away from the digital world of charts and tickers to something you can literally go out and touch: direct real estate. Now, this is often seen as a much more stable, tangible investment, but it asks for a very different kind of commitment from you as the investor. Make no mistake, this is not a sit back and relax kind of investment. When you're a landlord, you're suddenly a property manager. You're a repair person. You're handling tenant issues. You're basically a small business owner. It takes a ton of hands-on work and usually a whole lot of cash to even get started. And that really gets to the heart of the trade-off here. The rewards, they're absolutely clear. You get that steady rental income, and hopefully your property value goes up over time. But you earn those rewards through your own time and effort. It's an active job.
So if stocks and crypto are about riding the waves of the market, and owning real estate is about being a hands-on manager, where does private lending come in? Well, it gives you a way to get into the real estate market, but by playing a totally different role.
Let's just put a really clear definition out there. Private lending, at its core, is you acting as the bank for a real estate project. You're the one providing the loan capital, and that loan is secured by a real physical property. Your profit doesn't come from the property's value going up, it comes from the interest payments on the loan you made. And the process itself is pretty straightforward. 1, you provide the money. 2, that loan is backed by the property itself, which is your safety net. 3, you collect a predictable income stream from scheduled interest payments. And 4, this is the big one, you're not the one getting calls about leaky toilets or late rent. So this is the distinction we really need to drive home. As an owner, you're the landlord. As a lender, you're the bank. You're both involved in real estate, absolutely. But your responsibilities, your risks, and what you do day to day are just worlds apart. One is active management, the other is all about passive income. No, look, this is not about saying one of these is better than the other. It's really about understanding how these different approaches can actually work together. A smart investor doesn't just pick one horse and ride it. They build a diversified portfolio that's designed to meet different goals. And this, right here, is the unique thing private lending brings to the table. Unlike the wild ride you can get with stocks, private lending is built from the ground up to provide a steady, predictable stream of income. It's a strategy that's all about structure and security, not speculation.
So you would think about your overall portfolio kind of like this. Maybe you have stocks in there for that long-term growth potential. You might own a rental property for appreciation over many years. And then private lending can slide right in as that third piece, providing a stable, income-generating foundation that doesn't necessarily move up and down with the stock market.
Let's just put it all together in one place. With stocks, you're an owner. With crypto, you're a speculator. With direct real estate, you're the landlord. And with private lending, you get to be the bank, focused purely on collecting interest income from an asset-backed loan.
And that's really the key takeaway. Each of these investments ask you to play a completely different role. Once you understand the role you want to play and the rewards and responsibilities that come with it, you can build a much, much smarter and more personalized investment strategy for yourself.
So, now that we see where private lending fits in the big picture, the obvious next question is, how do you actually do it well, right? How do the pros handle this stuff to get the best returns while keeping the risks in check? Well, in the next parts of this series, we are getting into the real nuts and bolts. We're going to break down how these deals are actually put together, how savvy investors look at a loan and evaluate the risk, and we're going to tackle the question everyone asks. What happens if the borrower can't pay? You're not going to want to miss that.
Thanks everyone for watching this video. We hope you really enjoyed the content in this series. Be sure to check out the next one in this series to keep learning how private lending works. And if you'd like to go deeper, you can download the free guide in the video description. Till next time, take care and God bless.